Bitcoin is being manipulated by BlackRock and Wall Street ever since the ETFs were introduced at the beginning of the year. And so we can see here, Wall Street has more control over Bitcoin price after the introduction of the ETFs per hedge fund manager, Mark Yusko. And so we're going to be watching a video where he explains exactly what is happening. He argues that institutions are dumping the price by shorting Bitcoin in futures markets, a common tactic used for price manipulation. And so, there's a ton of bullish news out there for the cryptocurrency markets. However, every day we see the price of Bitcoin drop substantially, right? I mean, it'll be trading around $60,000, and then we'll see a $2,000 drop in Bitcoin within 5 to 30 minutes. And so in this video, I'm going to be explaining what is possibly going on with BlackRock and their trading software and who they have partnered with early on. And so if you enjoy this type of content, make sure to hit the like button and subscribe to the channel for future videos. Also, while you're down there is a link underneath the video to Margex where you can trade different cryptocurrencies. This exchange is a little bit different than other basic exchanges. And so you can see here they have multiple different cryptocurrencies on the platform, whether you're looking at leverage trading XRP or Bitcoin or Solana. And so you do not need to sell your cryptocurrency. You could be holding on to Bitcoin or Ethereum or USDT and leverage trade these different crypto assets. And so definitely make sure to check that out. And so let's go ahead and take a look at this quick video here explaining what's going on in the markets.
Trading isn't bad in and of itself. I mean, there is demand for IBIT shares. There is. But the problem is the price of Bitcoin is also impacted by the futures market. And this is one of the things you can see it almost just about every day. You get these big drops, like $1,000, $1,500. It's like, whoa, what's going on? Who's selling? No one's selling. No one who owns Bitcoin on a ledger or a treasury is selling. No one. No one who owns the ETF is selling. It's these futures selling, and that changes the price because there's a little quirk on how ETFs work. ETFs don't trade all day long, right? They trade in a very small window at the end of the day. So it's logical. If you got a big order, you got a big order, you're BlackRock, and you have to fill that order with Bitcoin. You don't want the price high. You want the price low. So you actually, somewhere else in your book, might, not accusing anybody of anything, you might go out and sell the shit out of Bitcoin to push the price down so you can buy it for cheaper. That tends to happen on Wall Street all the time in all assets.
And so we can see there, right? I mean, they're explaining what is happening in the cryptocurrency markets since institutions and hedge funds got involved with the ETFs. And so they may know that they have to go out and buy $200 million of Bitcoin because of the inflows they got throughout the day. Now, at the end of the day, they may go ahead and drop the price down significantly to where the liquidity levels are, to where they're seeing stop losses being set, and then they know that they can buy cheaper, right? If you're buying $200 million of Bitcoin, it's worth dropping the price $1,000. And so there's a lot of manipulation going on right now in the cryptocurrency markets. And so another tool that is also being used is Aladdin here, which is the trading AI software created by BlackRock. Now, this was created back in 1988. This has been around for a very long time. This is what BlackRock uses for all of their trades, right? And so I guarantee that they are using this for Bitcoin here, and I have proof of that. And so we can see that Coinbase, selected by BlackRock, provides Aladdin clients access to crypto trading and custody via Coinbase Prime. And so they have been using this here since August 4th, 2022. And so for over 2 years, they have been training the software and the AI to understand Bitcoin, right? Understand the moves that are happening. And so they're definitely using this software here for institutional buying to understand when they want to purchase or sell Bitcoin, depending on their inflows or outflows for the ETF. And so I definitely think this is being used to manipulate the price of Bitcoin. And so the institutions and hedge funds are a lot smarter than we think, right? I mean, we all know the price of Bitcoin eventually is going to go up, right? I mean, the tokenomics for Bitcoin, with there only being 21 million coins out there, and this possibly becoming digital gold, we can only see the price of Bitcoin continue to go up. We're going to start seeing altcoins have utility and use cases out in the real world. A lot of this has been developed over the last few years. I mean, if you start looking back into cryptocurrency back in 2017, there was a lot of large institutions and companies getting involved in cryptocurrencies. And so I do not think that they just were interested for a couple of months and they dropped off. They've been doing development, they've been doing testing, and we're going to start seeing implementation, especially in the finance industry. And so I definitely think there's a big improvement that could be made there, right? I mean, the finance industry has been the same for decades. There's not much change that has happened. We have slow transactions, high transaction fees, and so that is definitely somewhere where cryptocurrency could have a big impact. And I think that will be the first stage of implementation, and then we will start seeing more implementation in different areas throughout the world. And so something else I'd like to mention here, talking about storage of cryptocurrencies. And so there is a public service announcement here that North Korea aggressively targeting crypto industry with well-disguised social engineering attacks. And so keep yourself safe if you're holding on to cryptocurrencies. Now, you may trust the exchange that you're buying on. However, I still think that it is very important to hold it on a cold storage, whether that is a Trezor or a Ledger or some other type of device. If you are not trading the cryptocurrency, maybe you plan on holding it for 6 months to 10 years. If you're not trading on a day-to-day basis, I recommend holding it on cold storage. It is the safest thing to do. They are not expensive. They're about $70 to $80, and it is the best thing you can do. So if you do get attacked, you're going to wish you had it on there. And so I definitely recommend getting one of those if you do not already have one. And so, as I mentioned, there is a link underneath the video to Margex. If you're interested in signing up for this leverage trading platform, there is a link underneath the video. They do have a free Casper airdrop going on right now, where depending how much you trade on their platform, you can earn up to $5,000 of Casper. And so if you enjoyed this video, make sure to hit the like button and subscribe for future content, and I hope to see you in the next one.